Tuesday, May 7th, market analysis. Stan Ehrlich, good morning. Yes, I'm going to be a speaker at the Investment Masters Symposium given by the Money Show people, Kim Githler out of Saratoga, Florida. This coming Thursday at around 1 o'clock, I believe, give or take a half an hour or something. And my topic is going to be cyclical analysis and how it can apply to automated trading. So let's start out with the E-mini, which again is marching north for the third day now, and surprisingly strong. I did not expect this rally. I thought we were going to kind of roll over without this new high, which started on Friday, then more of it yesterday and a little bit more today. And it went through resistance levels and is getting closer and closer to making a new high for the whole trend. Frankly, I don't trust this rally. I think we're going to turn back down again for a variety of reasons. One of them is not yet being overbought. We're only at 68 on the daily RSI, which is not 75 or higher. So that's not in the cards. But the resistance area that we are generally in could do the trick. I just don't think we're going to maintain this strength. And I do look for a test of the lows that we had only on April 19th. And I do still think we're going to be coming down to 4,900 or maybe even 4,800 in a little while. I thought it was going to be toward the end of this month. I think that is now have to be pushed back a little bit. So maybe sometime in June. Next chart. We got the 1 minute E-mini stalling out for the last couple of hours, an hour and a half in this price range. And if we do come down to 52.18 and keep on slipping, then we've got a little bit of a downside breakout. And then the next breakout would be 52.10, and that could start something significant on the downside. But we've got quite a ways to go to really get this ball rolling on a bearish note. Otherwise, you can see yesterday afternoon, sideways, a little wiggling around here, and then we got a stronger move starting this morning. Next, Spider, we have one gap, two gaps, and now three, very rare, gaps up. Gaps are almost filled, almost always filled. That implies that we're going to come back down to 506 on the Spider probably soon. It's one of the reasons why I'm expecting a downside retracement. The 1 minute, 5 minute, that is, Spider shows you these big gaps on Friday, Monday morning, and again, a little one so far today. Next chart is the QQQ. Also gapping up like crazy. So having seen innumerable gaps over 5 decades, these are usually filled. Now, it's also very unusual to see 2 or 3 in a row like this. So I'm expecting it to have a retracement. You're looking at the 5 minute QQQ. You can see here it went up to resistance area on Friday and just plowed right through it on Monday and Tuesday. But there's a heck of a lot of previous price range in here that was probably going to be a big problem starting, well, I thought on Friday, but so far not really. So I'm kind of baffled here, to be honest with you. Not quite sure, but I'll be back on track very shortly. NASDAQ futures, very rare to see gaps in NASDAQ, and we don't have any because it's only closed for an hour. But we are coming back toward this major resistance area, the topping out time frame that was actually the beginning of February until about the middle of April. That should stop this rally, in my opinion. And we're looking at the 5 minute NASDAQ. Looks like the others, of course. And the Russell, a lot of resistance, no gaps, daily data chart, new highs like the rest. Again, this just plain old everyday bothers me the way it's acting. 72.70 at the moment on the RSI is pretty close to being overbought. And with the Russell being different than the other indexes to a significant degree, we are just now encountering a very large resistance area at today's high, where we are pretty much right now. High and last on the Russell at the moment on this 5-minute chart. And we got the Dow YM futures contract. We're not seeing any gaps on this on the daily data. It's a futures contract, but we are getting back to a bunch of lows that we saw back in March. So some resistance, and it's starting to pull back just a little tiny bit so far. You know, tops always start with a single tick, but that's impossible to tell at the time under 99% of the cases. So let's see this thing start to break the day's lows and start to drop into Monday's price range and see what we can get on the way down, which hasn't even started yet, I don't think. What about bonds? We got the bond market also supporting strength in the indexes for the moment. Not overbought yet, but also getting very close. So it seems to me that interest rate futures might get overbought at the same time the indexes get overbought and everything turned down together. And this week. So bonds are close to overbought, approaching the top of the channel they've been in for a long time. They should come back into the support range at a minimum. 10-year notes. Pretty much the same story here. RSI 69, not quite so overbought, but approaching the resistance line. And I am looking for, as you can understand, some sort of downside correction happening very, very soon in interest rate futures and indexes. Now, crude, heat, unleaded. Crude, almost a new low, not quite. At one of my little support lines I've drawn in here, the yellow one, bottomed out there yesterday, came close to it today, and slightly higher than the opening today at the moment. Yeah, it might be turning around. We are oversold for the last 4 days at a support area, so I think it's quite possible. This could be the beginning of a rally in crude. Next, natural gas. Already did start a rally, broke a major bear trend line, which was the top of a downward slanting wedge. A nice looking pattern too. So on Monday, yesterday, closed well above the top of the pattern, through the resistance line, following through today. This looks like we're going to rally at least up to 2.4.5, 2.45, and maybe even further than that fairly quickly now. Next, we got the gold, silver, and platinum. Gold is bouncing, almost got oversold, not quite. Not any particular reversals here. Looking for probably just a little bit more of a bounce. I don't see this making new highs yet. I think we have one more move down to these lows, or maybe even a little bit lower, hopefully to get oversold, and then into new high ground. Next, silver. Starting to rally a little bit sooner. Support did hold in silver. This is classic. Turned around. New highs today for the last 4 days, previous 4 days. Almost high and last. Looking pretty strong. I would expect some more strength out of this. So that might corroborate some more strength out of gold as well. They tend to, to go up and down together in general. There are exceptions, but in general. What about platinum? Well, it started a rally already over a week ago at a support area also. And it's now having a little trouble at a resistance area and not quite overbought, but it looks like this could stall out slightly and pull back a little bit. Plus the fact that there's a chance that there could be a major top formation developing that would be very bearish for platinum if this pattern develops properly. And I won't go into the details right now because I really don't have quite enough evidence to show you. So I'll wait a little bit longer to see if it develops properly. But we're stalling at resistance. Next, Copper. This is a bearish engulfing ER sell signal on the top of the market. I don't have the strategy running at the moment. So coming back into approximately the middle of the range of that bearish engulfing ER sell signal on April 30th is not uncommon. This could be a high day. We could see copper turning around now, today, at these prices and turning down. Don't jump the gun. Kind of wait a little bit to see if it's starting to slip. Next, beans, oil, meal, corn, and wheat. We got a buy signal in the bottom of beans on April 22nd. Again, strategy is not running at the moment. That is an ER buy signal on April 19th, period. Small rally afterwards, great. A little bit of a dip, no surprise, but no new lows. You got a double bottom formation, past tense now. We did break out above the high between the two lows yesterday late. Great. Minimum upside objective, I'll measure for you real quick here. You measure the lowest lows to the highest high, and that's the depth of the formation, and you go straight up from the highest high, and the minimum upside objective is 1338, give or take a penny or something. Fairly accurate. Could go further than that. Next, the bottom formation in soybean oil, which I have been talking about for quite a while now, at least a week, seems to be starting to work. Yesterday, it started to pop up late in the day, and we got a little more upside follow through this morning. Now I want it to get above today's high on a closing basis to break out of the support area, which is held. That could be the last shoulder low on a gigantic, I don't believe it yet, but it looks like a gigantic head and shoulder bottom. I have to say it. The neckline is the bright yellow line, and the upside objective is ridiculous. It's something like 80 something, which would be damn near double the current price of soybean oil. I don't know. This looks more bullish than I would like to talk about, but I can't help it. There it is. Meal. We got the bottom in meal to the exact day on February 29th. Screaming rally in the last couple of days, doing fantastic, but we're now overbought. So I'm thinking that we're about to have a downside correction in soybean meal. I'm rushing a little bit today because of some other obligations. Next, corn. We got the bottom of the market to the exact day, also on February 26th. New highs, upside breakout a couple of days ago, more strength following through, upside objective probably around 500. That's for corn. Looking awful good, but we're overbought, should have a small downside correction soon. Wheat. We got the bottom of the market to the exact day on the July wheat. I like the way this is looking. We're poking through the top of resistance today. Not holding though. So maybe the downside correction is starting. Would not surprise me. Up against previous highs back in December. Top of the resistance area. Not holding very well at the moment. And overbought. Probably starting a correction down to 620 and maybe even a little lower than that. But what I do love is the fact that we got the exact low day on March 11th with a bullish engulfing ER buy signal. Excuse me. Now, cattle, looking good. We're starting to rally. I'm starting to favor the bullish side. I haven't said too much about cattle for a while, but lows held on a retracement, no downside follow through. We're now pressing the highs for the last couple of weeks. Looking better. Longer term trend, neutral to stronger. I'm looking for a modest move up to 180 and a half, maybe even 181 and a half. That's not very far away. We'll see what happens. Not a very strong opinion, but I'm going friendly on the cattle. Hogs. We got the exact high day, April 10th. Bearish engulfing ER sell signal in overbought conditions. Shoulder a couple of weeks later, April 23. Neckline break on May 1st. Down, 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 and today at the moment, approximately unchanged after a nice rally, which is not holding very well. We're almost low and last, and I would not be surprised to see it make another new low on hogs. Now, surprise, surprise, I'm starting to get data this morning on unleaded gas, which is the ICE in New York. Great. I'm not sure why, but they started to update my charts, which is good news. And I'm afraid that's not the case on unleaded gas. That's not true. So I'm going to pass on leaded. And I saw this earlier, so something may have changed on my ICE exchange futures. And this is also not updating. So as I have been doing for approximately a month now, because of some complications with the ICE data feed, I'm going to pass on the New York ICE, cocoa, coffee, sugar, orange juice, cotton contracts. So you have a great day. Got to go. Thank you very much.